Stripe finalizes $7 billion OpenRouter acquisition. Routing logs from millions of daily queries just became Stripe's newest asset class. The acquisition hands them visibility into every model's true cost curve. Payment volume alone won't decide who wins developer wallets next year. OpenAI will have to either publish clearer benchmarks or risk losing routing share to whoever Stripe favors in its dashboard. Knowing the price per token winner creates a moat no single model can match on its own. Nvidia nears $100 billion OpenAI credit deal. Nvidia's credit commitments have a track record of staying on paper. The Ohio lease depends on this materializing, yet last year's similar pledge produced nothing. OpenAI's data center timeline slips again if banks demand more than a letter. Watch the actual chip orders from TSMC to see whether this one turns real. The gap between announcement and delivery has already cost OpenAI months on its cluster build-out. Expect the same pattern unless actual capital moves this quarter. Anthropic revenue jumps 14 times in Q2. Positive operating income at this revenue velocity changes the funding math for every other frontier lab. OpenAI now faces pressure to show similar profitability or justify higher valuations on promise alone. The gap will force Microsoft to decide whether to increase its own spend or accept a slower catch-up in the enterprise segment. Smaller labs will see term sheets shrink as LPs chase only the proven winners. This dynamic will play out over the next 3 quarters as burn rates diverge sharply. Thrive Capital fund value rises 7-fold. Concentration bets paid off so cleanly that the fund's net multiple now dwarfs diversified peers. The 7-fold jump will push other VCs to double down on single company exposure rather than spread risk across the AI stack. Limited partners may start asking for similar concentrated vehicles, which changes how capital reaches smaller startups in the ecosystem. Early employees at those concentrated names gain leverage in the next compensation cycle. The pattern will repeat in the next vintage if returns stay this lopsided. Z.AI releases GLM 5.3 AI model. Spontaneous cybersecurity skills arising purely from coding data caught the team off guard. The resulting 2-week hold before weights drop shows how hard these jumps are to forecast. Other labs now face the same audit requirement on every large run, or they risk releasing models whose hidden strengths regulators will flag immediately. Expect training pipelines to add mandatory capability sweeps that stretch every timeline by at least a month. Robinhood backs Y Combinator startups. The fund itself matters less than the 220 fee layer now sold directly to users who have never modeled seed failure rates. Retail accounts chasing YC access will absorb the same carry that limited partners already negotiate down. Most will discover the volatility only after the first fund writes off half its companies. Traditional seed funds lose their edge on fee-sensitive capital as Robinhood normalizes the structure for a crowd that lacks any seat at the term sheet. Nebius and CoreWeave pitch short-term deals. Short contracts let startups walk after one model iteration instead of betting the entire raise on a single provider. Hyperscalers locked in 5-year deals that often exceed total funding will now see churn as teams test Nebius or CoreWeave for 3 to 6 months. The flexibility shifts power to smaller players who can match demand spikes without long commitments. Watch AWS and Azure margins compress once they must offer similar escape clauses to keep the same cohort. Alphabet plans $5 billion Australian dollar bond sale. The Australian bond masks credit derivatives already sitting at $43.8 billion on data center vehicles outside disclosed purchase commitments. Those backstops plus another $24.1 billion in process reveal leverage that rating agencies have yet to price into the $5 billion issuance. Investors treating the offering as plain debt will face repricing once the VIE exposures surface in footnotes. Expect Australian buyers to demand higher spreads once the full derivative stack becomes visible. Roboterra mulls Hong Kong IPO. Founders at the robotics firm are testing whether Hong Kong investors will pay up for physical AI without the mainland's regulatory overhang. Success here would force Shenzhen-based rivals to either list locally or seek earlier revenue from factory deployments. Watch the cap table. early backers likely pushing for a dual-class structure that locks in control ahead of any US export curbs on components. That structure could limit follow-on rounds if growth stalls post-IPO. CXMT becomes China's top-valued firm. Valuation leadership here signals that memory supply chains are decoupling faster than software plays. Domestic foundries now face pressure to allocate more wafers to CXMT rather than logic chips, squeezing capacity for AI accelerators. The real test arrives in 18 months when export controls tighten further. Either margins compress or they accelerate joint ventures with local equipment makers to bypass restrictions. Alibaba tackles rising AI costs. Cutting inference spend now means prioritizing models that run on their own silicon instead of Nvidia clusters. That shift hands an edge to Baidu's Ernie in enterprise deals where latency SLAs matter more than benchmark scores. Kuaishou will likely follow by open sourcing parts of its stack to share the burden, forcing smaller labs to either partner or watch their burn rates spike without matching distribution. Self-driving trucks test California highways. Highway permits change the economics because freight routes avoid the urban edge cases that still trip up robotaxis. Aurora's backers now expect volume production timelines to compress by a year, pushing suppliers like LiDAR makers to scale output ahead of schedule. Kodiak's move forces traditional trucking firms to accelerate their own retrofit pilots or risk losing shippers to the first autonomous fleets on I-5 corridors. Apple seeks 15% cut on external purchases. Most large apps will route payments through Safari anyway, treating the 15% as an optional toll rather than a requirement. The biggest shift comes for smaller developers who lack the engineering budget to maintain dual billing systems. This hands Stripe an opening to capture more iOS transactions if it can match the simplicity of Apple's system before mid-2025, or it risks losing that segment to direct bank transfers. Smaller teams may simply abandon in-app purchases altogether. PayPal sale talks advance with Stripe. Stripe would inherit a payments network 3 times its current scale, yet the integration carries hidden costs around compliance teams already stretched thin. Advent's private equity angle points to a quick split of PayPal's consumer businesses from its merchant services. That structure forces existing competitors like Adyen to lock in enterprise contracts now, before the combined entity can cross-sell at scale by late next year. The deal timeline now hinges on European regulators who blocked similar combinations last cycle. Google allows AI watermark removal. Removing the watermark makes Google's images indistinguishable from real photos at first glance. Stock photography platforms will now treat all AI output the same, pushing detection startups to pivot toward invisible metadata standards instead. OpenAI faces the same pressure to follow suit on its DALL-E outputs, or risk its generated content getting filtered out of commercial libraries within the next 12 months. Smaller creators lose the easy differentiation they once had. Rakuten tests drones with Helsing. Japan's airspace rules will need rewriting once these drones move beyond testing ranges. Helsing's involvement gives Rakuten an edge in autonomous logistics that Amazon must now replicate through its own defense-adjacent suppliers or concede the Asian market share. Procurement cycles in Tokyo typically run 18 months, so expect the first scaled deployments to influence commercial drone standards across the region by 2026. Local regulators have already signaled they will fast-track approvals for dual-use technology.